Hey John, how's it going?
Pete, what's going on? How are you?
I'm doing great. Let's just hop right into it. Obviously, the market's making lower highs right now. We could dive into that from 75 different ways till Sunday. We're actually seeing a heavier reversal today after the economic data came out, and we'll talk about that in a second. We're going to talk about Nvidia. We'll talk about macro picture. We're going to talk about investing strategies today. But let's talk about risk because off the camera we were just talking a little bit about how conditions are less than perfect. And I think a lot of new investors and traders just don't get to the level of depth of their thinking, not even level of technical knowledge, the level of depth of their thinking when they're looking at the stock market or the options market. And they falsely believe that every trade has the same probability and every trade should have the same risk. And ironically, you and I, with all the years of experience that we have, we were literally just talking about how challenging it is right now to find a great trade and what that translates into risk. So you want to dive into that a little bit?
Yeah, absolutely. It's extremely challenging in this type of environment. We keep making all-time highs. Now things look a little bit not shaky, but a little bit tired, right? If you looked at that last candle that you just saw. So what I see is you have to size down a little bit. You cannot be, when you see the market looking a little tired like today, you have to ask yourself, should I be on the accelerator or should I be completely a little bit pared back? And I think one of the biggest mistakes new traders make, and I've seen this happen a million times, is that they feel like not only do they have to size up for every single trade, but they have to have their full account size out there. You know what I mean? Going to work at all times. And I think there's this conception that if you have, everybody has a limited amount of resources, no matter what your wealth is, right? So I think there's this notion that you have to have your maximum capital out there in order to maximize your profits. And that couldn't be further from the truth. What you really need to do is trade smartly, and you have to trade with what the market's giving you. And right now the market is giving you, an uptrend where, sentiment's still pretty good. The inflation data, which we'll get into, was positive. But, we are pulling back from our highs. So that means that there is some selling pressure starting to occur, and that's something we should be aware of as we put risk out there.
So I think one of the things with the inflation data, we're going to bounce back and forth here. I hope everybody's okay with that. The market has been waiting for a rate cut. We came into 2024 where they were talking about a rate cut and talking about 6 rate cuts for 2024. Now we're ending June's trading today. The first half of the year is done today, and we've had 0. And we have a lot of members of our trading, our coaching community specifically, asking about why are we still going up if the market, if they haven't cut rate cuts. If that's that's basically what everybody's doing. This is still AI mania. This is still AI boom. But in my opinion, I feel pretty strongly about this right now, especially after the Micron earnings this week, which we could drop those on the chart as well, just to give everybody an idea of what we're talking about here. I do believe that we are seeing what I would call a bullish echo in the markets right now, where I just think I think that the market is now shifting to great. These stocks quadrupled 10, 15, 20 times over the last 18 months because of the unbelievable expectations of AI. But the companies that rallied, or for the most part, the companies building the chips for the potential of AI. And now the market, I believe, and again, we saw this in Micron's earnings this week, is now saying, what's next? How are you going to use it?
The market always asks that question. That's another thing new traders have to understand, that the market is a forward-looking indicator at all times. So they're 6 months, 9 months, 1 year out. What's next? What's next? What's next? And right now, everything's priced in. So when you see the price action in the Qs today, which you pulled up before, it makes sense because the what's next is a big question mark. There isn't much what next.
Mm-hmm.
The only thing we know is that we did see a shift last week out of some of the semiconductor names, right? Some of the AI names into the more software or hardware type related names that are a little bit more conservative, for lack of better words. So even within the tech sector, there's been this shift within industries, right? From the more risky to the less risky. And that's an interesting little bit of a shift that we saw. And it was kind of under the radar because if you looked at the overall market, you kind of would have missed it. So that's, if you look at that screen looks perfect right there. If you look at like AVGO, NVIDIA, that kind of stuff, But then you look at your other companies on the right hand below Apple, those are some of the names that are starting to benefit a little bit. What I do like, one of the things that's a little bit encouraging from today earlier was there was a little bit, at least of a little bit more leadership out of the sectors today, early this morning. So, we'll see if that trend continues. I really would like to see new leadership in order to take the market a little bit of a leg higher. The what's next, in other words. I would like to see some other sectors start to kind of show some leadership.
So we've actually started to see a little bit of that in our research. I thought it would be kind of fun. So we actually track order flow, institutional order flow every day. And we do it a little bit of a unique way where we are actually tracking the percentage of stocks, not just the raw number of stocks. So for example, this is the percentage of all the stocks that meet the minimum criteria over a 5-day period in each sector. So we're actually kind of seeing a shift in communication services. You can actually see not only the number go positive, but the number is going up every day. So we started to lean a little bit into communication services, and then we started to look at Google and Pinterest, and even Meta is still sitting near all-time highs. So we ourselves also in the community, from a sector rotation perspective, again, which is shadowing the institutions. We're not guessing where they're going. We have communication services that are in play now, but this bad boy over here, energy, a lot of them are starting to break bearish moves to the upside. And that's a whole other area that we could be looking at over the next month if the money starts to work its way, as it looks like, out of those semiconductor stocks.
Yeah, I mentioned energy about a week or two ago as it being, I think the words I used was, it looks so bad, it's starting to look good.
Yeah, exactly.
And at that point, 2 weeks ago, maybe 3 weeks ago at this point, it wasn't anywhere near the strength that you just illustrated. It was at its all-time lows. It was doing terrible. It was, it was the worst sector out there. And you know what? As an institutional trader, again, putting my former trading hat on when I was an institutional trader, that's the best time to start piling into something. Summer months, nobody's paying attention. During the Juneteenth week, when we had a day off in the middle of the week, that's when this stuff started to get interesting. You know what I mean? And now you see XLE on that screen. It's starting to break its long-term downtrend. If it stays above that line, and maybe spends a couple of days gathering a little bit of basing up there, it could potentially break out. It's a little early, but it's something to kind of keep an eye on. And if it shows some leadership, that's actually pretty healthy for the market, because it's showing that money is moving from one group to another instead of out of equities, which is something you don't really want to see, obviously.
Yeah, I think the way it would be moving out of equities would be if this started to rally, where you can get that risk-free from the government interest rate that's a little bit higher, and down at 4.3, that's not nothing, but up towards as it was getting up towards 4.5 and 5, that's when it became a lot more interesting.
It got really interesting when it got near 5. Yeah, absolutely. I mean, it's just good portfolio management. If you're managing billions of dollars of other people's money and you could get free money at 5%, you would do it. It's just prudent, especially with markets making all-time highs and markets continuing to move higher. It makes sense to take some money off the table. But that being said, when you have these weaker sectors like industrials, like energy, basic materials, some other names that just some other groups that just haven't really performed very well over the last few weeks, that would be where some bottom feeding comes in. So I definitely like the way energy is starting to look, and I think it's a potential to go higher.
Hey, it's Pete. John and I really want to thank you for being here today. You have all the choices in the world on YouTube right now to find out about stocks and options, but we want to continue to over-deliver, and the only way we can do that is for you to let us know what you like. What kind of stocks and options training would you like for us to see on the channel? Best way for you to do that, give us a thumbs up. That tells us what we're doing is what you like. A little deeper, leave a comment. Let us know if you have any questions about what's on the video. If you want to take it even further and get personally coached by myself and John, click those links below in the description and see if coaching is right for you. Hope to see you soon. Thank you again. So John, we have a way of doing things on the equity side of things. How do you look at something like FANG here, for example, which is FANG, PSX, a couple of those stocks are some of my favorites because of volatility. You can actually see when they trend, they move really, really well. How do you handle something that on the option side of things that's already trending versus it's the first time it's breaking that trend where it's clearly not established yet, but you could be getting in at the start of something?
Yeah, the most important thing to do one of the extra steps, I should say, that options traders have to perform when they're putting together their strategy, and it's a good extra step to have because it gives you more choices. It's actually a positive thing. Is you have to select the proper option strategy. So once you figure out, okay, I'm bullish on FANG, for instance, I think it's going to break out. Let's say that's your thesis. The next thing you really have to look at is, okay, well, what's the overall market volatility doing? What's the VIX doing? So that's always in the back of your head. Are we in a high volatility environment or are we in a low volatility environment? So clearly, based on that chart, we are in a low volatility environment. The next thing you have to look at is, well, okay, compared to the broad market, which is in a low volatility environment, how's FANG doing? Is FANG historically volatile right now, or is FANG doing okay right now? And then you put together an option strategy, which isn't too complicated. What you're essentially doing is you're deciding to go debit or you're deciding to go credit. And what I mean by that, are you an options buyer? Are you a call buyer, where you're going to put together some sort of call strategy on the debit side, or are you going to be selling puts? Are you going to be more of a bullish, still bullish, but you're going to be selling puts instead of buying calls? Are you going to be doing some sort of a credit spread or something like that? Those are the choices you have to make. It's the last step, and once besides placing the actual order and figuring out what your sizing is, that's the last step in the puzzle when you're an option trader. So, and it's often overlooked. I think a lot of options traders, where they fail, unfortunately, and this is kind of the catch-22, the easiest strategies in options are long calls and long puts, just like buying a stock and selling a stock.
Most popular and also the most risky.
That's what I was about to say, 100%. So like the people, when you first start trading options, you're actually dealing with the most risky strategy, long calls and long puts. So once you get a little bit of education under your belt, you start to realize, well, I can put together a strategy that matches the overall market, what's happening. And that's the most important thing.
So the way that we do it on the equity side, so John's options on stocks, we have this saying in the community. So if we're looking at a stock like FANG, for example, right now, or even something else that a couple of people mentioned this morning in our pre-market game plan, which was Roku, obviously perking up pretty good this week, as well as Snow. A couple of people looking at Snow today. I would not be looking to trade either one of these yet from a swing trading perspective. From a short-term perspective, especially Roku, again, we dropped down to that shorter time frame. Absolutely a little bit more active. You can get in there and mix it up a little bit. This is VWAP. I mean, clearly still good VWAP separation under there.
On a lower time frame, it looks great.
Yeah. On the daily, though, not quite there yet. So I just want to kind of give a lesson out there for everybody. Number one, if it's kind of first sign of a reversal, and this is not really a reversal to me yet. This is more of a short covering rally where the short sellers are now exiting. We still need to see if this holds and goes sideways, and then we could be cooking with gas there and maybe say it's a reversal. FANG actually did break. FANG actually did get to the other side. It's kind of pausing on the other side of that. So the thing that we have that I think would be kind of fun for everybody to write down, because we're kind of getting back into not every trade is the same. Different trades require or call for different allocations of capital. Some deals are better. Some deals are just okay.
Yep.
Initial reversal is initial position size. So everybody could kind of like write that down. That's kind of how we talk about it. So I was asking how you do it on the option side. So I kind of train everybody to really, the most important thing is to read the quality of the idea, and then how far are you from what you might call an optimal entry. At least that's the language we use. But especially on a reversal, we're talking about April, May, and June, 3 months worth of selling versus basically 3 green candles. So 3 months versus 3 weeks. We have to qualify what is our level of conviction on a new buying opportunity at this point. And clearly it's tough to argue 3 months versus 3 days. Of course, it could possibly go up. But when we're going to risk money, we want to risk money because it will likely go up, not possibly go up, because of the argument. So initial reversal, initial position size is how we start to look at some of those ideas. But here's the lesson. I want to see if you do the same thing on your side, John. So we had a couple of people ask about Snow today, right? And looking at the most recent price action, you could surely see that it bounced a little bit of news. Yep. Now, I kind of brought it back to when I had my trading firm in New York City, and I would say everybody in the room would stand up, and everybody have their piece of paper and say, "Call out your best idea today. Call out your best idea today. Or call out how you want to allocate my capital. Tell me how you're going to manage my money." Right? So we kind of use this as an example today, and I'll just pop that on the screen again, just to give everybody context. I said, okay, to the people that called it out this morning, and every day, 8:30 in the morning, we have the pre-market meeting here online in our community. I think it's the best way to mentally get ready. But I think this is one of the most valuable parts of working with a coach or somebody, like you said before, our experience. I said, I can absolutely see the idea you're looking at. I see it. I understand it's bouncing for a couple of days. But I want to ask you something. Is that the best idea you can find? And I think that's
Right.
I think that's
That all you got?
that a lot of newer or unsuccessful traders just miss. Sure, you can talk yourself into that, but is that really the best idea you can find right now? And I said, if you're standing up in my office in New York City, I would not let you trade that idea. That you can't tell me that's the best idea that you can find.
One of the things I do, one of the extra layers I add to my weekly analysis is I grade the market. So one of the things I like to do is I look at the S&P, I look at the Russell, I look at the Dow, I look at the Qs, the NASDAQ, and I assign a grade based on trend, based on price action. How well is this market behaving? And then I go to each individual sector and I do the exact same thing. And that gives me a little bit of an edge in the sense that I kind of know where the money is flowing or not flowing. And then within that universe, I figure out where does Roku, Snowflake, and Fang exist, right? And if they exist in an environment that's, let's say, suboptimal, I am not going to put all my capital in that trade, even if I like the way it really looks, even if it looks fantastic. I'm not gonna allocate all my capital. And conversely, if the market and sector look fantastic, and the stock looks like kind of a wait and see, like Snowflake and Roku, I'm still not going to allocate all my capital to a trade like that. I like to have all the ducks in a row before I step on the gas. Fang looks probably the best out of the three, in my opinion, only because, again, energy sector also, the whole sector looks like it's ready to maybe break through its downtrend. And it maybe needs a couple more days for confirmation, but Fang looks relatively stronger compared to XLE. It's one of the stronger performers out of the group. So where I'm going to put my money, see how I'm building a case. Like, why would I pick Fang over Exxon or Chevron? Why would I pick Fang over Devon Energy, right? Or Murphy Oil? I'm going to look at Fang and say that one is an outperformer compared to the group. And that is, again, gives you an edge. And that allows me justification to be standing up in front of you in your New York office and giving you a case for building that trade out.
Yep. So we kind of went through that, right? This is the value that most people don't really see in coaching, really, is everybody's like, just give me the trade, right? But what about the trades you shouldn't be in the first place that you end up digging yourself a hole in, and now a good trade comes around, and now you're digging yourself out of a hole and getting back to zero, as opposed to maybe a small loss, maybe not even being in the idea, and you're just focusing on the ideas that have the greatest chance of following through. So don't discount that coaches can also help you reduce, avoid, and eliminate ideas you shouldn't be in the first place, and then start pointing you towards more good ideas. And kind of finishing up on that, number one is I strongly encourage on our game plan calls in the morning, I want you to call out an idea. I'm going to give you another one. First, I'm going to stick with energy, and then I'm going to give you another one because this is another lesson that I think I really want everybody to just think about, right? So sticking with the energy sector. So I'm glad they called them out, right? We talked and we got into that whole conversation. And I said, well, I already have this stock in the energy sector on my watch list compared to all the other ones that are going down or just potentially breaking out. This is in the energy sector, and this is what this stock has done. Now, wouldn't I rather be looking at this as opposed to even something that is first time reversing versus here? So I'm kind of like adding on to what you said, John, about building the argument and going through that sequence of
100%. Clearly, the stock that you have in front of you right there, Targa Resources, missed the memo that energy has been weak for the last several months. For whatever reason, I don't know the reason, don't know anything about the company personally, but just by looking at the stock, it is clearly outperforming its entire peer group. So that's the kind of name you want to be in when you want to jump into that group.
Yep. So I want to belabor the point about coaching because I wish I had a coach when I first started trading, and we were going over the market. I was comparing the market today to when I first started trading, which was in basically the first quarter of 2000. which is after the dot-com boom, and then we had a 3-year move to the downside. Basically, March of 2003, we finally bottomed out. What happened on this morning's game plan? And I strongly encourage everybody to ask questions and whatnot. Somebody yesterday, or maybe it was 2 days ago, brand new to the community, and I said, hey, and his name happened to be John. I said, John, you're hiding in the background. You're here in the 14-day program. I promised you I was going to give you custom help, but you have to tell me how I can help you. You have to participate. You have to ask a question. So John posted a stock in there, and he didn't give me any feedback. All it was the symbol of the stock. And that happens to be one of my pet peeves, because the whole point of me coaching is I want to know what you're thinking, as opposed to just you want to hear what I'm thinking, because you could be seeing it 180 degrees in the wrong direction. So I'm actually going to put the stock up here prior to me talking about it, which is this one a couple of days ago. I'm going to give you a shot for shock value. That was what he called out, right?
Okay.
So my immediate
interesting.
So again, this is more about the value of coaching. This has nothing to do with the members of the community, although I want them to feel comfortable to get out of their comfort zone so we can have a discussion like we talked about with Snow, right? So we looked at this, and I said, I haven't traded this before. And he actually called it out because it's an energy stock. We started talking about energy stocks reversing and whatnot. And I said, well, John, the stock, his name happened to be John as well. I said, the stock is up, I believe it was 400% or like some crazy number at the time that it was called out, 438% in 5 candles.
Let's jump on it, man. Let's do it.
Right? So again, as I did with these other guys in the morning, I walked them through. I said, the only reason we choose to accept risk is because we built an argument that the likelihood of the initial part of the trade is going to move in our favor to justify starting the trade. And then as the trade works itself out, we have plans in place, literally how to add into a winning position, which we call part of the profit maximizer for piling into the winners. So we went through this, and it lasted like 10 minutes of all the reasons why this might not be the best idea. And John got a really great lesson out of it. And I said, look, is it possible the stock's going to continue after being up 438% in 5 days? I said, sure, anything's possible. But do we want to risk our hard-earned money on something that is a lottery ticket versus literally looking at this and saying, what is likely to happen next? And what does that mean for risk?
It's really exciting to look at names like that. They're the ones that are always in the news. They're the ones that people talk about on all the chat groups and stuff like that. But if you're just always looking to swing for the fences, you're going to strike out most of the time. And trading does not allow you to do that. If you continue to swing for the fences without a game plan, you'll eventually run out of money before you are successful. So what you really need to do is develop a foundation, which is what we do, is to teach about like singles and doubles and consistency. And then, if you want to take 1 or 2% of your portfolio and speculate, be my guest. You know what I mean? But that's all you should be doing, and manage your portfolio accordingly.
Yeah. So here's what ended up happening. Obviously, we talked John out of placing the trade. Again, we're not financial advisors. We just helped him build the argument of whether or not follow through was likely for the risk that he would have needed to accept on the trade. And then this is what happened the next day.
Oof.
And then that's what happened the next day after that.
Well, there you have it.
So again, I don't predict. Okay, I want to make it clear. The strategy that John and I do, stocks and options and whatnot. It's about knowing what's happening right now, and more or less having a system in place that tells us if it's still valid or if it's changing. But what we're talking about here is not a question of whether the stock was in play. The question was, if I buy it right now, what is the likely result?
Yeah.
And that's what I'm talking about with coaching, and hopefully all these YouTube videos and podcasts and all that kind of stuff. Like, the goal for you to be getting out of these continuing education and continued learning, which I hope everybody does as much as possible, is you need to first learn how to minimize mistakes before you can step up. Because if you don't learn what not to do first, you won't have any money left over to have the experience to understand how to make money.
Yeah,
and that's really the big lesson I'm going to get across.
You have to learn survival skills first, and then consistency. And one of the things I love in my coaching is when we debate the strategy. Like, sometimes I'll come up with a strategy based on volatility. Like I mentioned earlier, I'll say we should maybe do a vertical debit spread on this, for example, where it's a two-leg strategy. And then maybe one of my one of the community members might say, hey, I'm thinking about doing this instead. And then we go back and forth about, well, why do you want to do this instead of this? What's your thesis? You think it's going to go higher? Do you have a different target than me? Do you have a different entry than me? Do you have a different time frame than me? And then if we go back and forth, sometimes everybody looks at a chart a little bit differently, and they might have a different we still might be bullish. We both might believe in the same direction, but one person might be more bullish and one person might be maybe a little bit less bullish. And that's really what I love about options, is because we could both be right and be profitable. One just might be a little bit more conservative than the other, or vice versa. So that's one of the things too that's very valuable about what we do and how we coach.
Any recent ideas, John, that you're either in or thinking about?
Like I said, I would love to see some leadership. I like the energy space. So obviously the names like FANG, but also financials. MMC is one that I was looking at a little bit earlier. That has a really nice uptrend there. It did pull back, but if you'll notice the last few candles on the pullback, it did put in some lower shadows there. And I believe it did manage to hold its 20-day moving average, if I remember correctly. Yeah, see, it managed to. Yeah, so that provides a pretty good entry point if you look at it. Now, you got to watch earnings. I don't know when earnings are on this thing. So that's an important thing about options trading. You don't want a nasty little surprise.
July 18th.
Oh, so you got a little bit of time. So I would maybe do the July 19th calls on something like that. But with the intention, here's the important thing, with the intention of being most likely out of the trade before earnings. So I would probably look to put together some sort of trade that way. I don't know whether I would do a spread on that. I'd have to look at volatility, obviously, to see if it's worth selling some premium against my long call option. But otherwise, I would at least try to target the last high that it made.
So financials, this is where we'd be looking at. We've actually been looking, just to kind of segue over, asset management companies have been kind of holding the bid, and just recent breakouts. They pulled back recently, but like you said, they're still holding what a lot of people would consider the level that you would need to watch. So we got KKR and APO, I believe, was the other one. So you can see they're kind of holding while the market pulled back in April and still sitting up there. So really, APO is really the one I'm looking at more, but I kind of lean on both of those together, kind of like an industry group.
Yeah, I think they're doing pretty good, and I think that the banking sector probably has a little more risk when it comes to rates and stuff like that, and the predictability of when it's going to happen, when the cuts are going to happen. Asset managers, insurance companies, maybe some of the exchanges as well, might hold up a little bit better. So I'm kind of looking at those groups.
Actually, I think you mentioned one of the exchanges last week. You mentioned ICE, right?
ICE, yeah, very similar to APO there. It's kind of holding. Those are outperforming compared to some of the other parts of the sector.
So the early energy stock this is the one that I've been watching for a while. FANG is another one, but I will say from a dollar percentage gain, PSX, you can see that this one trends pretty well. It's obviously still in the throes of possibly breaking the downtrend.
Yeah.
And MPC, I know Marathon, we've spoken about this one for a while too. We've caught a couple of really nice trades in Marathon over the last year. We're looking for this basing pattern, which we talked about over here, to kind of hold. If it does hold and we get a little bit of energy popping out of this, no pun intended, I will be looking for one of these kinds of moves again. The one thing about these, though, I could give a little bit of feedback, is energy is a little bit different than, say, a company with the company fundamentals, where there's actually something out in the field. There's literally a supplier demand. You really have to be on top of your profit-taking strategies because they could move quicker if that's
energy's a tricky sector because it's obviously you got the geopolitical factor. You got stuff going on in the world, so it does get more affected by that kind of stuff. So yes, you take profits faster. You might have to kind of have your pulse on the news a little bit more when it comes to that kind of stuff. But it is a sector that was kind of downtrodden over the last couple of months and is starting to wake up a little bit.
Yeah, actually, we can go back into, this is what I love about tracking the order flow. If we go back to a little bit earlier in the year and you look at this column here, energy lit it up there for a while. And that's, when you start to track this, you kind of can hold on to those winning trades a little bit longer. I mean, a lot of the other market was green, but this was dark green, which is a deeper percentage of stocks that were positive. Look, you only need a couple of months to catch it. You can make your entire quarter just two good trades that you have concentration in.
Absolutely. And that's the key, to know when to step on the gas, like we were talking about earlier.
Yep. Okay, that's what I got for today, John. Any final parting words of wisdom?
Final words of wisdom. It's the summertime, so enjoy the summer, number one, which means, watch your sizing. I mean, it's the summer months, and that means that, you could get some surprises here and there. We do have earnings season coming up in the next couple of weeks, so that could be potential catalyst for some movement, either sector rotation or some sort of even corrective action. We'll see.
Yep. I would say one thing that we mentioned quite a bit in the community is separate the stock from the company. Obviously, we're talking about the artificial intelligence run from a stock price perspective, but there's nothing wrong with those companies. They still have billions of dollars in orders, so don't worry about the company. We're talking about whether or not you're not trading the trend in the story from 6 months ago. Just realize the story change was going to change the price action.
Yeah, absolutely. I think that's where bias comes in, which is why I love what we do. When we do our top down, we're looking at market, sector, group, and stock. We try to filter things based on what's it telling us, not how we feel or what we think or whether we like a company or love a company or not. You know what I mean? So that's another important factor. Don't just keep trading the same old stuff every week. And that's something that takes some practice.
Yeah, and the reason you bought it in the first place might not be valid anymore too. So you got to be on top of that as well.
Absolutely.
All right, John, thank you so much. I will speak to you soon. Have an awesome weekend.
Always a pleasure, Pete. I'll talk to you soon. Take care.